All right. Good morning, everyone.
Morning.
How is everyone doing today? We already had a chat of like 1 hour before we hit the record button, but let's go for it. How are you doing, Jorn?
I'm doing great. It's exciting as ever. Crazy stuff going on. Yeah.
Absolutely.
Yeah. Sweet. What
Bullish
about you, Zoe?
Still.
Congrats with your DNB registration.
Thanks. Yeah. I mean, for us, really, I can safely say that the weight off the shoulders of such a thing is really a nice feeling. It's I've never been part of like the traditional route of trying to either get a license or such. Of course, we've worked with some like lawyers offices in the past and such. But with a regulator like this, well, not really regulator, but like with an institution like this, the process is actually it's not that different from investing. And we'll get into that in a sec. Like someone like Casper, imagine you would get through an investment that would be locked up for over a year, and you have no idea whether it's going to fly. Complete black box, right? It's very similar feeling. Like they have all the power. They can say no, you don't get the registration, and you can shut the doors. And you have no idea what they're thinking. And basically, whenever they decide that they need more information, which is legitimate, right? I believe in the fact that we need a registration like this, but you still get the feeling like complete uncertainty, basically. And that's in an emotional way, it's pretty stressing. And I noticed that now we have it, it really lifts so much weight off your shoulders, because basically the business and the idea and the team and all the stuff that you spent so many years already working on can live. It's kind of accepted. So yeah, super happy.
Yes. So what does this mean for you exactly, for you guys? Because I am in your Telegram chat from the BUX community, and then sometimes I scroll through it and I read all these messages like this is one of the hardest registrations in the world to get, one of the hardest licenses. Is this true? And is this really, does it mean that you can now go full on with marketing and that kind of stuff?
It's nice. It's always nice, right? Like the communities, how they can phrase these things, right? I think this is the best thing in the world, and the moon is next. But yeah, actually, it's not so far off. The Dutch National Bank has been criticized. Actually, a judge also this week expressed that even though there was no decision against the registration, like the strictness of the registration enforcement. The strictness of that was criticized. It was not actually like turned back or anything like this. But Betonik, a company in the Netherlands that has fought this whole process for quite a while, has basically done a pretty good job in making sure that the DNB is now going to rethink, or they have to formally express what they think of this. So yeah, it's extremely hard to get compared to other countries, and that's exactly what they're criticized for. So there might be some change in a few weeks, depending on what their actual verdict's going to be from the National Bank. But overall, the Netherlands has one of the strictest forms of registration. So basically, it's very close to traditional finance, which in essence should not be the case, right? Because we're not dealing with traditional finance. We're not dealing with fiat currencies, such and such. So the fact that we are actually building a solution now that kind of enforces identity verification for wallets, the closest you can get, right? Because it's pseudonymous, so you can't really 100% certainty say that someone owns their Bitcoin. But this is something that is actually unprecedented. Like no other country does this. So it's quite a big thing.
Nice, man. Congrats. Really good steps for you guys. Anyway,
yeah,
you
we can
just
do marketing, by the way. Sorry.
Yeah. Okay. That's
next,
great.
Yeah.
Oh, that's good. That's good.
In terms of competitive advantage, does this put you ahead of a lot of competition within Europe?
Super good point. So I'm not an expert on this, but I definitely did my best to try and stay up to date on what's happening. And there's actually a company that is doing a lot of work here. It's called Adan. Actually, one of the hosts of the Epicenter podcast is also part of this organization, and they're hosted in France. And they also talk with the European They try to make a point for a good, legislation on the crypto side, Europe-wide. And the fact that the Netherlands is so strict, I think, is in part a competitive advantage, because it's already kind of decided that and clear that most countries will look at whether you have a registration somewhere else if you apply for a registration in their country, right? Because in the European Union now, if you want to offer your product or do marketing in a particular member state, you need a registration in that particular member state. And this is pretty, like, on the one hand, it's bad for all the companies that are operating from other countries that don't have their offices here as such and such, because they can't really do these registrations easily because they just don't have the manpower or the knowledge or the resources to do such a thing. So I think it could be a competitive advantage for us, the fact that we got through the strictest, because it makes it easier to navigate throughout the member states in the European Union. So yeah, definitely. And so marketing is now only limited to one member state, which is the Netherlands. But it's really exciting to see where we can go next.
Awesome.
Yeah, very cool, very cool. Anyway, you just mentioned Casper in there, and I think it's cool to highlight for our listeners what happened there.
No.
So I think 2 weeks ago this was that the Casper token was being released in the private sale, and we were like with 7 guys across the globe at 2 o'clock at night, just waiting for this waiting room to be open. And I think you said this, Jorn, that you calculated how much people there were in front of us in the waiting room and how much money that was.
There was 4.5 billion waiting for an Alex, and there was only room for 4 million.
Yeah, that's insane. So I was like number 200,000 in the waiting list, and I think no one of us got through. But you just told me that Casper had a X300 already.
Yeah, the IOU, so the token itself isn't trading yet, but the IOU, which is kind of a reflection of what the investors think the price will be, it shot up to $6. So the token went for sale around 2 cents. So yeah, it went up 300 times.
Fuck.
And the cap was $1,000. So I think that, you know, the people that got through, which were quite a few, they made like $300,000 just from $1,000 investing in Casper.
Yeah, that's insane.
We missed that boat big time.
Yeah, definitely. But the beauty is that I think Coinlist itself is a brilliant platform because it democratizes the early stage access. And you can see that they're on the roll. So the coming month, there's going to be a token sale for Mina, which is a lightweight blockchain. So instead of having this, you know, super heavyweight blockchain, which, you know, very very rapidly becomes a burden on the nodes with thousands of GBs. This one is, I think, 22 KB or MB. Due to the system that they use. So it's very lightweight, which means everyone can check all transactions and keep up with it. And then the other token sale is Clover. And Clover is a bridge between Polkadot and Ethereum, and it's built on Polkadot, and it allows any asset from Polkadot and Ethereum to be traded against each other and to be used on each other's networks. So that's a pretty big deal. And for our listeners, it's awesome because anybody can participate in these token sales. All you have to do is make an account on Coinlist, register for the token sale, and then be there once the token sale is happening. So I'm definitely participating. You guys too, I think.
Yeah, definitely. Like you introduced me to Coinlist, so maybe it's good to give a bit of background of what Coinlist is. I hadn't heard of it before, like just a few years back, but now it's the first time I used it. I heard it's backed by Naval Ravikant, I think one of my inspirers, heroes in this world. So what is Coinlist exactly?
So Naval Ravikant he got famous or successful with a startup AngelList, in which he connected investors, entrepreneurs, and talent. So he kind of created this ecosystem for startups, and he saw crypto pretty early on, and he decided he wanted to do, because it's with tokens, so it's a different dynamic. So he decided to do the same as he did with AngelList, but then for the cryptocurrency industry. And what he's mainly what the concept platform is mainly focused on is not to give a few insiders all the opportunities for early sales and early token sales, but actually open this up for anyone. And I think it's an absolutely brilliant concept. It's, if you see all the opportunities like Uber, Facebook, once they got public, all the real gains had already been made, and now anybody can get in on the action from a super early stage.
Yeah, that's perfect. So just for example, like Casper, for example, this is a coin then that we want to invest in. What does that do? Why is this so hyped?
Casper is it's a blockchain for enterprise, and this is the sales pitch for a lot of these projects, right? So what they do is they look at all the problems from the current blockchains, like they're too slow, they're too expensive, they're too complex to use. And what Casper does is they try to solve all these problems in a very easy to use, fast and scalable blockchain, which is for enterprises. So companies can build decentralized applications that can scale and that are easy to use for anyone.
All right, and
Interesting.
yeah, just from my understanding, because for me, when I saw this waiting list, like 300, 400,000 people, I was just like, what's going on here? Like, why are this many people at this point live wanting to have access? So is this because Naval is behind it, or is it just, what's the reasoning behind this hype?
I think it's the momentum, right? Coinlist has an excellent track record. So all these platforms that launched on Coinlist, they've gone up crazy. Like I think 10 times is the minimum, but the maximum is like 500 to 600 times of these projects. And that's I think that combined with the bull market and that the news got out that Coinlist sales have been doing so well, people just want to get in on the action. You see that with all the token sales, by the way, like token sales on Cosmos, on Binance Smart Chain, on Polkadot, all these are massively oversubscribed. There's way more capital than there is place for capital to be allocated.
Yeah, it's interesting because I remember that, was it the last or one of the previous episodes at least, we discussed the fact that this bull market seems to be quite different from the one that we experienced in 2018. And as of, I don't know, 2 weeks ago, maybe it was already before that, but as of 2 weeks ago, what I'm seeing now is exactly what I saw beginning of 2018. It's exactly the same. So this gives you kind of a perspective on where we stand in terms of the time span.
Absolutely. Like I was looking at the top gainers a couple of days ago, and I saw Tron, Ripple, Stellar, and I was like, yeah, we're there. Yeah, it's that time again. There's no idea behind them. They have no long-term viability. Well, there's an idea behind them for sure, but the long-term viability is just not there. They kind of had their shot and they didn't make it. But it's pumping, like it's going up like crazy. All these things are.
Yeah, but you had a good call again, Jorn, on Blockstack.
Yeah. Like Blockstack is. I've been looking at that project for a year, and I just think it's fascinating. Just all for me, it's what I want to see. Like I want to see applications directly on top of Bitcoin, so you can use Bitcoin directly for DeFi. And my estimate is, if this goes through, then a lot of people will lock their Bitcoin into the Blockstack protocol. And if Blockstack is successful, that would mean, like, it may sound like a crazy estimate, but I think if Blockstack is successful, they can capture 3 to 10% of Bitcoin's market cap, because that's the amount of value they could attract if DeFi really hits off. You can see the same with Ethereum. From Ethereum, a high percentage of that is locked into DeFi right now and is used into DeFi applications. And if Blockstack, and this is a really big if, because there's also a lot of competitors up and coming. And of course it has to work, and maybe it's not scalable, and it has to be proven. But if they succeed, and it could also be others, because you have Sovereign as well, which is coming up right now. And there's other projects that allow for applications on Bitcoin. But one of these, if it hits off, they're going to capture a small market share, a few percentages of Bitcoin, but that's massive. That's $1 trillion asset, probably soon to be a $2 trillion asset. If you can capture 1 to 3% of that, that's insane.
Yeah, that is insane. But again, you were right on the money. I think it went ×2 in the last few days. So why did that
Yeah.
happen? Like, what's going on?
So they announced, so Pomp, I think that it kind of started with Pompliano. He a couple of weeks ago, he shifted to Blockstack, and kind of the light bulb went off in his head, like, wow, this is, I can see what they're doing. Like, and he discussed it in the podcast, and he also did a clubhouse yesterday with the founder of Blockstack. So that kind of kickstarted, like, because he has massive reach. So I think that kind of started the ball rolling and started snowballing from there. And then on Monday they announced that they're gonna launch a Bitcoin collateralized stablecoin. So you can lock your Bitcoin into the protocol and issue a stablecoin directly with Bitcoin through Blockstack. And that's huge. If you see the rise of stablecoins right now, Tether, USDT, USDC, it shows the potential of what this actually means if this succeeds.
And so what I wonder is there's quite a lot of stablecoins right now, and I think you also mentioned something on Binance, right?
Yeah. That's another thing I discovered. I think it's absolutely crazy, but you can earn yield, so you can earn an interest on stable coins of 50%. Imagine on the bank right now, you can get 0.05. In some countries, you get minus if you have too much money on your bank account. Here, what you have to do is you can get BUSD and Tether, pull them together, lock them, and you can get 50% per year on that. It's crazy.
Hang on,
the mechanisms behind this?
Yeah, how does this work?
Yeah. So what you do is you get a part of the transaction fees, but then I have to say this yield will probably go down a lot, because right now Binance Smart Chain is stunting to attract a lot of liquidity, because the more liquidity you have, the more trading can take place, and the more these stable coins can be used throughout the ecosystem. So right now they're in a blitz scaling process of attracting as much capital as they can. And what they do is you get an interest on your stable coins, but most of the yield comes from these alternative incentive currencies. So you got Bunny Swap, Nerf Finance, all these different projects that have their own token. And these tokens are just recently launched. So they give very high amounts of these tokens away to people that support providing liquidity. So it's not, you don't get the yield directly in stablecoin, but you get those yields a little bit in stablecoin, but mostly you get it into these altcoins. So that's very risky. So the best way to handle that is just if you want that, like if you want the risk, it's fine. But if you don't want the risk, you can sell your gains on a daily, weekly basis, turn that into stablecoin, deposit the stablecoin again into the pool, and then you can compound that.
Right, and you're doing this right now.
I'm full on crypto, so I'm not interested in stablecoin at the moment.
Okay.
But I think it's a perfect escape valve. Once it really feels like, okay, this is getting too bubbly, this is getting out of hand, and I want to take some money off the table. Yeah. Then this is a very, very solid way to protect yourself from the downside and still make some returns.
It's a good exit plan, you say?
Yeah. Okay. And what I'm seeing, what for me is even more interesting, there's several tokenized gold projects being launched. So that's gold on the blockchain. And they're going to do the same with gold. So you have one type of tokenized gold, another type of tokenized gold, put them in a liquidity pool, make a return on that, plus you have gold. And gold seems to be ready for another run up. It's been like, it had a really good run until this summer. Then it's just been into a small bear market / correction. And now everything kind of seems to stack up for a very good period for gold. So you can make a yield on an appreciating asset, which is, and it's uncorrelated to crypto. So it's another very, very solid escape valve from the volatility of crypto.
That's interesting. So what do you think about, like, of course, this is a very common idea, right? Like Bitcoin is the new gold. But how do you look at this? And also maybe even the comparison between Bitcoin and gold? Because I was listening to a podcast the other day from economist, the writer of the Bitcoin Standard. I think it has some pretty good podcasts. He's very opinionated though, but where he more or less said, you know, first of all, it went into the silver squeeze, and the idea that the whole silver squeeze is basically didn't make any sense. Also, simply because the stock to flow does not support such a move at all. But when we talk about the stock to flow ratio for gold, of course, it's wildly different because it is actually quite a lot harder to do such to increase the amount of stock we have. So what do you think about that comparison? Because I keep thinking, you know, Bitcoin is not as volatile as many people say, not nearly as like this is all based on early days, right? But actually Bitcoin has not shown more volatility than some stocks like Tesla and such. So actually it's in that sense pretty good stable asset when you look at that. And also the stock market does not reflect actual value anymore by a long shot. But then you still start to think like, okay, Bitcoin could be a good store of value. It's stabilizing compared to other stocks, right? But what about the comparison with gold? Because now you're saying that in 12 months it might even double, like it's going for a run up. So how do you see that whole story?
The way I see it is, you're right. Like the Bitcoin's volatility is very low at the moment. I don't think that will last. I think I think Bitcoin will go wildly volatile at some point again. And I just think that human emotions will push it again over a point that exceeds realism and will correct. And then I think something that is very boring, like gold, is excellent. Like that's the way I see it. A peace of mind, just a very boring piece of metal that doesn't move much in price, but it's also, it can't get printed at will. So I think it's a much better store of value. Obviously, it's a much better value than fiat currencies, and stable coins are obviously backed to fiat currencies. So in that sense, I think it offers a better way to protect your wealth. And the boring thing, like you guys have been in the market for long enough to understand the value of something that's boring, like that you wake up and you don't have to look at the price to know that it's, you know, that there's nothing crazy just happened.
Yeah.
There is a lot of value in that for sure.
Yeah.
So then, and do you believe that more, because that's also an important consideration to make, right? Like you can get yourself into, you can expose yourself to a gold-pegged coin, a gold price-pegged coin, or you can actually buy physical gold. You know, some of these projects they work differently. How do you see that? Would you buy actual physical gold, or would you buy pegged coins?
It really depends. Like if you use it for trading and investing purposes, I think tokenized paper gold is fine. If you see signs that there's actual, you know, like systematic collapse economically, politically, then I think you can't trust the paper market at all. I think there's way more paper gold than there is actual physical gold. So right now, if it's already the case, and it's not a conspiracy, it's just out there. There's a lot more paper gold than there is physical gold. So if every gold investor right now on paper wants to redeem his gold, not many people will actually get their gold. And that's like, if you really want to protect your wealth because you see something like a really big problem occurring, then you need physical. But for trading purposes, I think this is fine.
And this is exactly what I was thinking, and maybe even worried about, is like when you think about, especially now with the bull market, right? Like people are making quite a lot of money, and if you're a little bit, in my opinion, conscientious about it, then you'll look at storing that value somewhere, and then you start to think like, okay, well, maybe part of the ideology of crypto is to not store it in fiat currency anymore. And I think we have the means to prove that it's probably not the best idea to store it in fiat currency, considering the estimation is that inflation rates are going to be around 15% to 20% maybe the coming 5 years, basically meaning that over the course of the next 2 or 3 to 5 years, your money is going to be cut in half if you have it in fiat, or your fiat investments as well. You know, and that's a good reason for all of these big institutions to start, like Tesla and MicroStrategy, to start heavily investing in Bitcoin, because they also see the same effect as we are seeing. But then when thinking about the increased volatility of Bitcoin, then it's like, okay, well, might not be the best way to store my value. I mean, it's certainly and probably better than fiat for the next 5 years, but then still not ideal. But then when you look at gold prices, you're like, well, gold certainly in terms of its stock to flow model would support my store value. But then on the other hand, paper gold is factored into the price. So that means that the stock to flow model that we actually have for underlying physical gold is not representative of the stock to flow model that we have in the gold market. So what the fuck? What do we do?
I've read gold experts that say that the real price of gold should be anywhere between $10,000 to $15,000 at the moment.
Ooh.
That's how much suppressed gold is, because gold is a measure of inflation, and a lot of central banks and governments are very incentivized not to let inflation show, and gold is the best measure we have for inflation, and that measure, the price signal is completely gone because of the paper market.
So in a way, you could say, I don't necessarily buy into Bitcoin as a new gold, yeah, right? But it's certainly somewhere, it's an approach of reality, I guess. But in a way, you can say then current gold prices are a reflection of the kind of paper money or fiat system. And in that sense, owning either Bitcoin or physical gold is a good hedge on that risk, because once the gold market is going to show cracks, basically, and the real price based on the actual physical stock to flow of gold will show, then you'll actually have a lot of value underlying that.
Yeah, and it's like I'm still, for me, Bitcoin is the new gold. Like I want that to be clear, but I just think that we're just having a lot of up and down shoots, because people, like, the world still has to properly value Bitcoin. And I think because of that, it's just like gold is boring, but gold is also physical. So it's limited to the physical world, whereas Bitcoin is confined to the digital world, which is where the whole world is heading. So in the long term, I think Bitcoin is a lot better than gold. But
agreed. Yeah.
If you're looking for like some good nights of sleep, gold is an excellent allocation for your portfolio.
Yeah, so
Yeah.
I align with you, Jorn. I think also I see gold as or Bitcoin as the future for gold. But I'm curious then, Zoe, why you say you don't see that?
It's actually because I think Bitcoin is better than gold. So in that sense, I wouldn't equate Bitcoin with gold, because I think it's different. Like it's kind of gold is the best concept we have to equate with Bitcoin, I guess. But it's not the same, right? I mean, the stock to flow is built in.
But do you think it will replace gold?
No, I don't necessarily think it has to replace gold. I don't believe that, but I think gold is basically, well, let's say like this: gold as it is now, like the market and sentiment and how it's used, basically, because gold, like I would separate gold, the physical gold, stock to flow to that. I would separate that from the price and the market of gold right now, and that's kind of what we just discussed. Like they're already kind of two different things. And gold as it is now, I don't think is that great, because it might be a good investment to hold physical gold, and I think it's good because it has a good stock to flow ratio. So in that sense, I'm not scared that gold will be replaced by Bitcoin, because it doesn't have to. We're in general, I look at things that show a real foundation and a legitimate, trustable stock to flow ratio. And there's of course some thoughts like, yeah, but we're going to do asteroid mining, or that's some crazy shit, like asteroid mining, and then we're going to mine gold. And I don't necessarily think, it was actually Saifedean Ammous that also went into that, and he definitely phrased my thoughts very, very well, in that I don't think that's a super high risk for the gold price long term. But I think gold kind of has a recovery to do, and I have no clue how the current fiat system is going to influence the world around gold. So I would say for the next, I don't know, 5 to 10 years, maybe longer, Bitcoin seems to be the way to go, and also because it's not physical, right? So it's way more efficient. Like we're using energy, and I wouldn't say that Bitcoin is efficient, but we're using energy basically to store our money. And I think, yeah, of course, I love the digital world, and I think it shows a lot more reason to stay. But I would happily, in a while from now, happily hold gold. I think it's a super reasonable store of value as well.
Yeah, sure, I agree. Oh, sorry, go for it.
It's the programmability, like what we just talked about with Blockstack. You can't do that with gold in a trustless way. Like you always have to trust. Same with tokenized gold. You have to trust that they actually have that gold. So obviously there's a lot of processes for transparency and audits. So like PAX Gold, you can trust. Tether Gold, I don't know, it's Tether. But Bitcoin, you don't have to trust anyone. And that's the same with DeFi, like all of these decentralized finance, which are basically financial services on an asset. You can't do that with gold in the way you can do that with Bitcoin. And basically, like the whole financial system is based like that. That's CeFi, right? That's centralized finance, and that's where a lot of the value from a currency comes from, because of all the things you can do, like loans, credit, swaps, whatever you want to do with them. And I think there's a lot of value as well in that you can do that trustless and direct and digitally, and you can't do that with gold.
Yeah, true. And you know, but to hook into, I mean, of course, we're all very bullish on Bitcoin, but I try to be mindful of the fact that dissimilarly to gold, Bitcoin is more likely to be a risk for central governments, and the governance around Bitcoin is also not waterproof, right? So we're still at the risk for forks. We're still at the risk of mining centralization, which is a real thing. So Bitcoin is not safe either. Like we have to be mindful of the fact that hopefully and ideally it's protected. And as Peter Thiel, I think into that direction, Peter Thiel commented like it could be kind of economically or geopolitically weaponized even against parts of the Western society that we value. And I don't know. I try to be mindful of that. Like Bitcoin is not the nirvana, right? It's a way out. It's good to set the right ideology again, to keep our mind towards this is where we ideally should go, but stock flow is not completely safe, and in gold that's slightly different. So
I'm curious to hear what Peter Thiel's opinion is on that, because I also listened to this podcast on Real Vision last week with Peter Thiel, with Pompliano and Mike Green, and this is really a good debate on the pros and cons of Bitcoin, and especially Mike Green really points the argument that there's a lot of centralization in China and countries like Pakistan or like Iran, and he thinks that is a strategic risk. And I think that Peter Thiel also thinks, if I hear you correct, but Pompliano, he's like very anti that argument. So what's your view on that? What's Peter Thiel's view on that?
Well, I think Jorn was. You actually mentioned Peter Thiel. Like I subscribe to his vision, but I think you're more into that. So maybe you can give us a more detailed rundown of what he actually thinks.
Well, I think Peter Thiel is an extremely interesting character. He's very well aware. He started with PayPal, of course, but he also founded Palantir, which is a very opaque data company that doesn't work with governments to provide them deep data insights into citizens. So it's a very obscure company actually. And he's also building bunkers in New Zealand to protect himself from the coming apocalypse. So he tries to revive his father that died with technology. So I don't know, like it's very hard to pinpoint his morals. But what he said in an interview was he thinks that China is weaponizing both the euro and Bitcoin against the hegemony of the US dollar, because that's the world reserve currency. And he says that China will do anything to undermine the world reserve status of the US dollar, and they don't want their own currency to be the world reserve currency just yet. So what they do, what he says is they'll promote gold and the euro to kind of attack the US on an economic front.
Okay, interesting. And Bitcoin as well. So gold, euro, and Bitcoin, or do you mean Bitcoin and euro?
Bitcoin and euro, sorry, yeah.
Okay, cool. Yeah. So
yeah.
Peter Thiel is in general like it seems also that he's funded some projects that seem to there's this whole concept of in society, just a little bit I'd like to add on Peter Thiel. In some way, I see him as someone that understands the world to a level that, and he also, of course, has the means, right? Because he's a billionaire. He tries to protect the world's kind of safety or sustainability, maybe even to his own vision. And he has all the resources to do such a thing. And he invested in Facebook, for example, but he also subscribes to the idea of kind of having a massive scapegoat for people's, I don't know, kind of the negative aspect of a social system. And it somewhat aligns with some of the investments that he's made and things he's put his money and words behind, to have something at least that could be kind of the cesspool for human society, but then also use such a thing consciously, or create such a thing consciously. So in a way, I would say that he seems to have the best intentions in some regards. But to get back to what you said about his Bitcoin vision, so it seems like the in the end, and that was kind of a big eye opener for me a while back, is the power over Bitcoin, specifically the mining, is just energy markets. Right? I mean, it's hardware and energy markets. And if we can, the more efficient we can make our chips. So where are our chips? Like a lot of advanced ways to build microprocessors, a lot of that is now in the US, and they have to try to prevent to not let China get their hands on that technology, right? Like, but China is doing their best because they have a lot of resources in that sense as well. They produce a lot of the hardware that we use nowadays, also because they control parts of the natural resources that we use, because they control a large part of the Congo and Africa and such. So they control all these kind of value streams. And this is very, so geopolitically, it's very interesting. Power, it seems to be extremely cheap in those parts of the world. So they can utilize the power to control the mining. And they also have a lot of physical resources to build, probably in the next 10 to 20 years, the hardware that we need to do such a thing. And it's mainly the knowledge and the specialization that is more on the US side for producing microprocessors that allows us to hold them away from seizing that power. But still, because of only the energy effect, we already see that China has such a control over the mining power. And this is, so now it gets like really geopolitical, like, where's that going to go? And yeah. Bitcoin is going to be centrally.
But that's my question to you guys. Like, how can China weaponize Bitcoin then, even if they have the most mining power?
Well, if it's if Bitcoin is what a lot of people think, if it's the best form of money, then if you extrapolate it a few years down the line, then people will up in that money, and that will automatically, if it's a better form of money, then that automatically means that they will opt out of the dollar. So what his view was, or the point he was trying to make, is if you make people, or if you push people to another currency like the euro or Bitcoin, that will automatically reduce the power of the dollar. But it's very interesting because this guy is super intelligent, right? So it could also be a play that because he's also a Bitcoin maximalist. He's an early investor in Bitcoin. So it could also be this game theory play that he's like, okay, Bitcoin is unstoppable. It's a decentralized currency. You can't ban it. China's going to weaponize it. So what you need to do as the US right now is build massive mining facilities and be on top.
Yes.
It could also be a warning signal to the US, like, hey, listen, China is going to weaponize it. So prevent that. Like, do the opposite of the play that they're playing.
Yeah, this is man, this is so good that you say this. So I always like to look at things from a first principle system perspective, right? And geopolitically, socially, whatever, you always see this effect of Yeah, you can kind of graphically put it as power pools into a particular direction. Then you need to increase power on the other side to get to somewhat of an equilibrium. And it seems to me that Peter Thiel is a very first principle thinker. It seems that like listening to what he says and thinks, he also sees that exactly this. Like Bitcoin is not going to be stopped simply because the stock to flow makes sense. You cannot control the stock to flow centrally. So whatever we will do, as long as Bitcoin keeps producing blocks, people keep building shit on top of it, it's not going to die out. Even if you ban it as a government, it's still a store of value, right? There will be a way to exchange it. The problem is Bitcoin mining and therefore rewards, mining rewards are not over. There's new Bitcoin being created, and the more mining is centralized, the more Bitcoin will be centralized in one part of the world. And they'll also get the profits off of that. They'll get the money because Bitcoin is going to be worth a lot. So in that sense, we need to make Bitcoin succeed. And that's what I'm hoping and kind of praying for. To make Bitcoin succeed, we have to start owning more parts of the mining. And that way we can create the equilibrium. China has a first mover advantage, basically. And we need to take that out of their hands and stabilize the whole system. And I wouldn't even say China's the bad guy here. Anyone wants growth. The US would do exactly the same, and therefore we would need China to stabilize it. But it's time to act.
Yeah. China just. I feel China that there was no state or top-down control for the Bitcoin mining. It just happened because there were a lot of tech-savvy guys that had access to cheap electricity, so they were super competitive, and it just blew up in China.
Yep.
But my question is then, you just mentioned we have to, it's as long as they're being create new blocks, but the argument that Mike Green used in his argument is that if China starts making empty blocks and creating that on the blockchain, then they can crash Bitcoin, for example. And I'm not totally getting that. Like, how does that work? Maybe from a technological view.
Yeah, I guess that's kind of a that's generally a risk of blockchains, right? Like if you control all the mining power, you can control the blocks, basically. You can control literally the transactions that go into blocks. And if you would do such a thing, you can completely destroy I would say it ends up being a fork. So I don't necessarily believe that that's going to happen, because imagine China controls 51% of the network. They'll create empty blocks. What's going to happen? You can just fork and you'll just get a network that actually does produce transactions, right? And that's the beauty of decentralized systems. They can kind of self-heal because there's still people behind the mining. So in that sense, the mining thing in general, I think, is a pretty good idea, and that's why I hope they will kind of stay with proof of work. Maybe we can make it a little bit more efficient, but it's a good method. But I don't necessarily think it's a risk. It's a general risk, but it doesn't seem to be super likely, to me at least. We just have to prevent the 51% from. And I think it's also like the incentive is not really there, right? Like, why would they want to destroy something like this if they can actually profit off it way more? And because they want to have global dominance, right? I wouldn't expect global dominance to really be more achievable if they start to produce empty blocks. Perhaps if the US would seize a fundamental as part of the power, then it would make sense for them to try and achieve this. But then again, that wouldn't be possible because they wouldn't control enough of the network. So.
Yeah, and they would kickstart hyper competition. As soon as America as a country really stands behind Bitcoin, then it's also a signal to the rest of the world that this mining thing is a really profitable investment at the moment, or a very clever investment. You already see it. I've been in contact with a couple of miners in Norway, but also from the Netherlands, and you see that there's a momentum behind it. You see it in the sales of mining equipment. You see it in the Google search volumes, like obviously because of the price, but it's not going away. Like there's a very strong incentive for people to start mining with the long-term perspective. So it just decentralizes it more and more.
Yeah, and what's crazy, by the way, is partly because of COVID. I mean, the economics of this whole world is of the whole crypto world and everything underlying it is so incredibly complex. But COVID then again comes in, right? So they distort a lot of the supply chain. Or that's what COVID does. So that also complicates the acquisition of mining gear, right? Because it's just it's basically bottlenecked suddenly. And what's interesting to see is that now the demand is getting way higher. So it also has a big impact on the current establishment of mining. Is kind of where we're at, and the amount of increase in total hash rate, I would say, because of the production of new hardware, that increase seems to be slowing down as far as I can see, because we just can't acquire the hardware anymore. We can't produce that at the same speed. And now there's actually quite a lot of situations where traditional money, maybe also crypto money, is being invested in future mining operations, simply because it's quite foreseeable that that's a profitable investment. So the future is already being betted on, right? So we kind of get a derived kind of investment vehicle now for mining and such. It's not how it's evolving, simply because the production is so bottlenecked.
Yeah, crazy. And I think, Jorn, you said you also wanted to mention something about Hester Peirce.
Oh, yeah.
Yeah. Hester Peirce. She's often dubbed crypto mom in the crypto community, because she's the head of the American SEC, or commissioner, and she's always been in favor of cryptocurrencies and kind of protecting against the bad narratives that have been floating around. And what she's been saying, she said, I think she said it yesterday actually, was that Bitcoin can't be banned. Governments would be very unwise to ban it. So the best thing to do right now is to come out with proper regulation to make it clear for the industry which direction they can take. And also sort of, she said it was unbelievable that there's no ETF yet. And that just has to come through as soon as possible, in her opinion. So she's been kind of the protector of the crypto community within the financial authorities within the US.
So what's an ETF, just to highlight that?
It's an exchange traded fund. So it means for institutional investors, they can move in and out of Bitcoin and just get exposure to the asset without actually owning the asset, because custody is very, very difficult. It's just the regulatory requirements make it extremely difficult for institutions right now to own Bitcoin. An ETF would make it accessible for institutions. So according to a lot of the insiders, this would really open the floodgates for institutional money to pour in, which is already happening here and there, but this would make it just highly liquid for these institutions to move in and out.
Yeah, so the introduction of an ETF, that would be really good for Bitcoin in general.
Yeah, super good. And they already have an ETF in Canada, so I think that's also kind of a thorn in the foot of the US, that Canada already has an ETF, because a lot of capital from the US then moves to Canada naturally.
What time span are we talking about? What do you anticipate?
I honestly have no idea how these processes go, because at the end of 2017 there were already talks of an ETF, and it seemed like it was going through, but it didn't went through. And we're 4 years later, and it's still very vague, because I think from a governmental and authority perspective, it's really hard to wrap their heads around how to approach these things, like especially with Bitcoin and decentralized systems. I think they're not in any rush to push anything through that might have a negative effect in the long term.
Makes sense.
Yeah, makes sense.
What's your opinion on that, Zoe?
I don't really have a very strong opinion about it. I mean, I think I align a lot with what you say, Jorn. As far as I can judge, it would be beneficial to the market overall. Of course, to the price as well. To get an ETF, that I get more value in there, more money in there, of course. But it makes sense also, like from the US perspective, it's pretty complicated. I think they have a pretty complicated relationship overall, right, with Bitcoin. Maybe even more than others. The dollar is the world reserve currency. Coinbase hosted there, so there's a lot of institutional power behind it. SEC is, as always, is kind of the most feared financial authority in the world, so they have a very strong stance on these things generally. So I can imagine, and also considering the other political problems that the US has, the current financial system seems to be kind of very much hinging on the control that they can exert over the dollar. And I don't know. I can imagine from their perspective, it's a very, very, very big step if they support Bitcoin's development in such a thing, because it's also a statement, right? So I'm not so sure, but I also heard that Grayscale, for example, now has. I don't know if it was recently, but I only recently figured out that they have an ETF proposal as well. There's I don't know how many more, of course, but yeah.
Talking about Grayscale, did you hear what happened with Nahmii?
Oh, there was FUD, right? Or
Yeah. So there was this news on CoinDesk that Grayscale was planning to incorporate Nahmii, but then this some fake company that was being created with also the name Grayscale, and of course, like I went all in on Nahmii, and then half an hour later was like, oh, there was a fake Grayscale company. So that was quite interesting.
It's so typical for this industry.
Yeah, right.
Yeah,
but the mother company from CoinDesk is also Grayscale, so that's quite weird how that can happen, but still.
Yeah, and the Grayscale trust, because they do their due diligence right before they offer this trust. So whatever comes into the Grayscale trust, it legitimizes the asset a bit. So Nahmii was a really, really small project relatively, and then this Grayscale trust would be enormous for this project. So I think the guys that they knew that, they bought in, created this fake news, and then I think they just sold at the top. It's terrible, but it happens in this industry so often. It's I shared it with you guys as well. I'm following this project called Babylon Finance, backed by Andreessen Horowitz. Super promising project, but they're not doing a token sale. And I found this Telegram group for the token sale. 7,000 people were in this Telegram group.
No way.
And then there was a message like token sales live right now. People deposited their Ethereum, and I was just looking. I was like, there is no token sale. Like, just Google, go to the website of Babylon Finance. There's this huge red banner with no token sale. But
fucking hell, man.
Yeah, this is 2018 all over again.
Yeah,
the FOMO is so high.
This is the Wild West again. This is complete cowboy land.
Yeah.
Okay, there's one thing
it's not gonna last long.
I want to touch upon before I have to leave, because it's already 1 hour in, almost. Yeah, you mentioned something really cool earlier. You were about Schelling points. Can you maybe elaborate on that?
Yeah. It's well, a Schelling point is basically an implicit agreement, or an implicit thing we can all agree on without communicating with each other. So there was this research conducted, and it asked people, okay, so where would you meet a random stranger on a day in New York? So say on Friday in New York, what time and what place would you meet that person? And what most people came up with was 12 o'clock in the afternoon at Grand Central Station. And that's where people would meet. So they didn't know each other, but they would just know to go there. And what we put it in, we put this in the context of Bitcoin. And also because of competitors with Bitcoin, and can Ethereum be the new money, and all these other cryptocurrencies, like, can they replace Bitcoin? And because of Bitcoin, because of the fact that it's pretty static, like it doesn't change so much, there's not any huge significant updates that change the entire dynamics. It's slowly becoming the Schelling point. Like it is the Schelling point of the crypto industry. But we're like the way we talked about it, it's the real value proposition of Bitcoin is that it's neutral. It's a vocal point where everybody can agree on. And with regards to Ethereum keeps upgrading and changing, which changes the asset, which is it can be very lucrative and good for the asset and also the value of the asset. But it makes it a very hard Schelling point, very hard to depend on that everybody can agree, like this is where we should focus, or this is where we should meet. And I think that's such an incredibly powerful concept that's behind Bitcoin.
But is Bitcoin not also upgrading?
Yeah,
it is, but very marginally, because the majority of the network has to agree with an upgrade. So anything that comes through is vetted, it's discussed, it's vetted again. and it takes a long time to get anything through. And especially it's hard because the community is so big and global. It's very hard to get everybody to agree on something, which makes Bitcoin, like upgrades to Bitcoin, very sluggish, which is, I think, is an enormously valuable thing. A lot of people underestimate, like a lot of people want to rush this thing through, you know, and like, why isn't it deflationary and shouldn't be like optimize the supply or move to proof of stake, or, but all these things would completely change the way people think about the asset and would just deter its shelling, the value of it being a shelling point.
Yeah, yeah, exactly this. Like I was having a discussion with someone around the kind of the cryptocurrency of the future, and so it seemed like his position was Bitcoin can adapt. You know, I'm a supporter of the idea personally. Bitcoin is a good store of value, and ideally should stay this way. Like imagine if we move to proof of stake and Bitcoin, then what happens to all the money in mining, for example? Like it would be pretty disastrous for a large part of the economy. In a way, it could even be a geopolitical move, right? But Bitcoin, and legitimately so, has always been very conservative in the changes, and also backwards compatibility has been really important when upgrading things. And a lot of these BIPs, Bitcoin improvement proposals, have taken a very long time to get through and get implemented. You can just follow all of that in GitHub. All the BIPs are there, and once that kind of focal, or like a Schelling point, sorry, that focal point would get lost, then it's like you're walking on ground that's moving itself, right? That there's no way to find any reference anymore. And it's quite important for change or improvements or judgment of anything that you have something to compare it with. And that's the value that Bitcoin is creating. It's kind of it's like entry level also for the traditional financial world. And it should stay that way, because it's usually the base that people use to get into other currencies, right? Like we even see that in the platform, and also other like and public numbers as well. People buy Bitcoin a lot, and that's where they get in, and it's extremely valuable to keep having this. And then from that point on, from that kind of stable level, as we mentioned before, it's even more stable than some of the stocks out there. They can move into more risky projects, and it would be kind of sucky if that value disappears, because then what do you have? Fiat's it's not going to be sustainable, so would be a bad move, I think.
And I think it's also important because Bitcoin is so new. It's very important that we are just starting to get into understand it. And then if it keeps changing, we don't really understand what the long-term play is here. For example, Ethereum has this new proposal that's coming due, I think this May or June, that burns transaction fees. So it reduces the supply of Ethereum. In a way, like if there's a lot of transactions, it could neutralize the new Ethereum issued for miners. So it's beneficial for the value of Ethereum as an asset, but we don't know in the long term how this will affect the dynamics of the Ethereum economy and the Ethereum network. So your point of reference just changes. Like we can't predict exactly what's going to happen. With Bitcoin right now, we can all agree and we can all see how it will develop. You know, there will be another halvening. We know how the hashing rate and the difficulty adjustment works. Like we can all agree on these things, so we can all agree on how this thing works.
Yeah, but that's interesting, because you mentioned that, Zoe, that there are some people within your circle that believe they can just change Bitcoin like that, right? They can go to proof of stake, for example.
Yeah.
But if that happens, then it's not at all a shedding point.
Well, exactly. Yeah, it's like I said, you would be walking on ground, but you would that move. So you would only, what would happen in the crypto industry is that you can only focus on the ground because you have to stabilize yourself, and you can't even focus on where you're going. There's no progress. And I think the people that believe this personally, I think they're wrong. Yeah.
We've got proof. Like we've got a lot of proof that is not a viable argument. We had the Bitcoin Cash fork, which wanted to increase the block size to make Bitcoin more scalable. And look at what happened to Bitcoin Cash and Bitcoin Gold and Bitcoin Diamond. Like they're all still there, but they're nothing compared to the market cap of Bitcoin. And it's been clear that the network has agreed on this is Bitcoin and this is what we choose. And I don't think you're gonna get a massive change like that. Like if we can't even get a consensus on a change to the blocks because it would change Bitcoin too much, then changing its entire dynamics through proof of stake. Like, I think it's pretty close. Like, I don't see it happening.
Same. All right, I think that's a good point to wrap up with. I learned a lot this episode. I was observing well, especially your talk about gold was really interesting. Your take on that. Yeah, I'm looking forward. Next time we have a guest on from Nigeria, so we can ask him some good questions. And I will see you then. Thank you, guys.
Thanks a lot, Niels.
Thanks for
See you
listening.
guys.